In the stock market, there are quiet days that pass unnoticed. Hours where prices drift, charts remain flat, and headlines talk about the same familiar names. And then there are days when something extraordinary happens. An obscure ticker suddenly bursts into the spotlight, leaving even seasoned investors stunned. That is exactly what we witnessed today with QMMM Holdings, NASDAQ, QMMM. This is not a mega-cap company, not a tech giant with a global brand, and certainly not a stock that most institutional investors had on their radar. Until this week, QMMM was just another small-cap name with limited liquidity and little coverage. But in a single trading session, everything changed. The stock soared by more than 1,000%, transforming into one of the most talked-about tickers on Wall Street. The numbers are almost surreal. QMMM opened the day around $8, surged to intraday highs above $100, and eventually closed near $107 after an astonishing run. That means anyone holding shares the previous day saw their position multiply tenfold in just a few hours. A move of that magnitude is not only rare, it's almost unprecedented outside of the wildest days of meme stock mania. So what exactly happened? What could cause such an extreme move in a company that most investors had never even heard of? The catalyst was a bold announcement from QMMM, a strategic pivot into blockchain and artificial intelligence. The company revealed plans to establish a $100 million digital asset treasury, allocating funds into cryptocurrencies such as Bitcoin, Ethereum, Solana, and Chainlink. Alongside this, QMMM announced the development of an AI-powered analytics platform and the creation of a decentralized data marketplace, with smart AI agents capable of auditing smart contracts and managing decentralized treasuries. In plain terms, a relatively unknown digital media company told the market it was jumping headfirst into two of the hottest trends of the decade, crypto and AI. Those two words alone were enough to light a fire under the stock. The reaction was immediate. Traders looking for the next explosive opportunity piled in. Retail investors, fueled by social media chatter, rushed to grab shares. Even some momentum-based algorithms likely flagged the surge and amplified it further. The result was a buying frenzy that pushed QMMM into the stratosphere. But beneath the surface, the story is more complicated. Because while the headlines sound exciting, QMMM's fundamentals paint a much different picture. In recent quarters, the company reported net losses around $2.8 million, negative operating margins, and a monthly cash burn of over $6 million. Its balance sheet showed limited cash reserves, and earlier this year it filed a shelf offering of up to $800 million, signaling a clear need to raise capital. That contrast is striking. On one hand, you have a company making bold promises about blockchain, AI, and digital treasuries. On the other, you have a firm with persistent losses, no free cash flow, and liquidity risks. This is exactly the kind of tension that fuels speculative manias. Investors aren't buying what the company is today. They are buying the dream of what it could become tomorrow. This is not the first time markets have reacted this way. We saw similar surges during the pandemic-era meme stock craze, when companies with shaky fundamentals soared on narrative alone. We've also seen biotech firms double in value after announcing vague collaborations involving artificial intelligence. The pattern repeats, story first, fundamentals later, if at all. From a technical perspective, the chart of QMMM is almost absurd. Previous resistance levels at $10 or $15 became irrelevant in minutes. The new reference points are entirely psychological: $50, $75, and $100. The intraday high marks the ceiling traders will watch, while the opening print near $15 now serves as a distant support. Moves like this often collapse as fast as they rise, which means anyone chasing at the highs risks severe losses if momentum reverses. The psychology driving this cannot be overstated. Humans are hardwired to chase stories and rewards. When traders see a stock go from $8 to $100 in a matter of hours, fear of missing out takes over. The dream of turning a small stake into life-changing money blinds many to the risks. Social media amplifies this. with screenshots of massive gains circulating. On Reddit, Twitter, and Discord, drawing in even more speculators. It becomes a feedback loop. Higher prices attract more buyers push the price higher, and the cycle feeds itself until it breaks. The risks are enormous. QMMM is not suddenly a profitable company just because its stock price went vertical. The issues it faced yesterday, losses, negative equity, a reliance on raising capital, still exist today. In fact, with a market cap inflated by speculative enthusiasm, the temptation to issue shares under its $800 million shelf becomes even stronger. Dilution risk is very real. At the same time, it's worth acknowledging the potential. If QMMM executes on even part of its vision, if it successfully deploys its crypto treasury, launches a working AI analytics platform, and begins generating real revenue streams, then this pivot could be transformative. A small company that successfully reinvents itself as a blockchain and AI player could capture growth far beyond what its old business model offered. That's the dream investors are buying into. 3 scenarios lie ahead. In the bullish case, QMMM follows through, delivers on its promises, and builds real value from its pivot. In the bearish case, the hype fades, the stock crashes back towards single digits, and the announcement is remembered as little more than marketing. The most likely outcome in the near term is extreme volatility, sharp rallies, brutal sell-offs, and non-stop speculation. For long-term investors, caution is warranted. Moves like this are thrilling to watch but dangerous to chase. Traders who entered early and sold near the highs will celebrate life-changing profits. Those who buy late in the frenzy risk, holding the bag when momentum runs out. Today's surge will also attract regulatory attention. Nasdaq and the SEC are no strangers to wild trading activity, and they may take a closer look at QMMM's disclosures, capital plans, and trading patterns. That doesn't necessarily mean wrongdoing, but it does mean scrutiny, especially when retail investors are involved in such speculative frenzies. Ultimately, QMMM's story is another reminder of how markets truly work. As Warren Buffett famously said, "In the short run, the market is a voting machine, and today QMMM received a landslide of votes in favor of its new story. But in the long run, the market is a weighing machine, and eventually, investors will weigh the company's actual earnings, cash flows, and balance sheet. That's when we'll know whether today's surge was the start of something real or just another entry in the long history of speculative manias. Until then, QMMM will remain one of the hottest and riskiest tickers on the board. Traders will watch every headline, every tweet, every price swing. Some will win big, others will lose just as quickly. And all of it will serve as a powerful reminder of the excitement, danger, and unpredictability that make the stock market the most fascinating game in the world.